This is your brain on risk. This is Mind Over Money, the podcast where Kevin Cook exposes the psychology of investing.
Welcome back to Mind Over Money. I'm Kevin Cook, your field guide and storyteller for the fascinating arena of behavioral economics. As if finance didn't give us enough to talk about in the laboratory of greed and fear, last week we had sort of a perfect storm in the crypto world with the collapse of something called a stablecoin, and something that was once worth $40 billion just evaporated. And it also seems to threaten the idea of the blockchain and who or why one might invest in the blockchain. At the same time, Bitcoin was crashing and ended up going, not just to 30,000, but bounced off of 25,000. And Coinbase, the major broker in the crypto world, had to include a few notes in their quarterly statement last Monday or Tuesday that said, in case we go bankrupt, we might have to hold on to your crypto assets because they could be in bankruptcy court with us. So that didn't lend a lot of confidence. So in a few moments, I'm going to bring in an expert trader, my colleague, Jeremy Mullen, who is also dabbles quite a bit in the world of DeFi. DeFi is short for decentralized finance. And he's going to explain that to us because he has some intimate knowledge there. And he did not get run over by the collapse of Terra, USD, and Luna last week. So he's a survivor there. First, I want to sort of put this in perspective about where risk lies in the financial world in terms of what we think about things being secure. Just think about your brokerage account where you trade stocks. When you sell a stock and your broker, or buy a stock, and your broker guarantees you're filled at this price, you're pretty confident that that trade is done, even though they haven't settled it with the other side. There might be a 2-day settlement in stock transactions, but your broker, as the custody of your funds and your transactions, can pretty much guarantee that that trade is done, whether you bought the stock or sold the stock, and they worry about making the money move from account to account. So that's a pretty reliable thing in the financial world that all of us are used to. Things that we're not used to when it comes to security are, what happened in the mortgage subprime crisis of 2007, 2008, where all these, mortgages that were being securitized were just paper, and illusions, right? Illusions of decent credit ratings. When we found out the credit rating agencies were compromised too. One area where I've learned things work pretty well in my career, in the 90s, I started working at the Chicago Mercantile Exchange, now just called CME Group. And CME Group has a tremendous track record in creating new products that they had to create security and collateral for. And they've done that so well through billions of transactions over 50 some years that it's just a model for creating a product and giving it some kind of security for counterparties, both the buyer and the seller. And they call it the performance bond. The performance bond just means you have to put up so much money to be able to take a position long or short in a given instrument, whether it's a commodity like oil or pork bellies or a currency like the euro. They trade all kinds of interest rate products and the S&P index. So that system has teeth. It has the performance bond system makes buyers and sellers accountable. The exchange clearinghouse stands in the middle between buyers and sellers and guarantees the trades, and they've never had a failure with that system. So that's one place it works really good. So I was trying to think of how I could compare this dramatic collapse in Terra and Luna last week, and Jeremy's going to explain a lot of the details to us, but I was looking for a tangible example, and the closest thing I could think of was a currency devaluation. When a third world country in South America or Asia or Africa all of a sudden decides to devalue its currency, and when it may have been pegged to the dollar at a certain ratio in the past, that's like an instant loss of fortune for many people. So And why would a country devalue its currency? Well, it could have a lot of reasons. All of a sudden, it can make its exports more attractive. It could shrink a trade deficit, and all of a sudden, any debt it has, it gets to pay back in more worthless issuance of its own currency, and basically reduce the cost of interest payments on that outstanding debt. So that's why, and a devaluation can come out of nowhere when all of a sudden interest payments are too onerous, or a country's having a problem with inflation, and imports exceed exports. Then they'll just do it out of the blue. And that's the one of the closest analogies I can think of that anyone should think about when they're dealing with some of these strange new instruments in the crypto world, where people talk about there's all these small altcoins and then this idea of a stable coin. I would just want to read a little bit of a Bloomberg article that sort of gives us the lay of the land here, because this is an article by Olga Karif published yesterday, where she highlighted that this collapse in Terra USD stablecoin and the Luna, I think Luna, may have traded $120 at one point. Now it's worth zero. And this Terra USD stablecoin was pegged at $1, and now it's zero. But they're wondering if this is a threat to the idea of the blockchain too. And so let me just read a little bit of this article. The Terra blockchain, the platform supporting scores of decentralized applications that let users swap crypto coins and earn yields, was halted and then restarted twice in recent days, as the value of its main cryptocurrency, Luna, and the related Terra USD stablecoin collapsed following a wave of selling pressure. Along the way, incentives for various parties to support the chain evaporated, sending the ecosystem that nurtured more than 110 applications, obviously software, finance applications, that were connected with more than 4 million digital wallets into disarray. While the chain is running again, and there are efforts in the works to keep it working, including a new plan proposed Monday by co-founder Do Kwon to start up a new version of the blockchain without UST. UST is the symbol for Terra USD. The attempt may prove futile, with Luna near zero. Meanwhile, many of its functions have been disabled. And here's a quote from Kyle Samani, who is the co-founder of Multicoin Capital. Terra, in its current form, is dead for all practical purposes. And the Olga Karif goes on here in this Bloomberg article from yesterday. The demise of a crypto ecosystem the size and depth of Terra, once valued at more than $40 billion, would mark a milestone in the history of blockchain, the digital ledger technology that was initially created to support Bitcoin more than a decade ago and is now the bedrock of the myriad cryptocurrencies that have cropped up since. Scores of smaller blockchains have turned up in The Walking Dead before, with their coins trading for less than $1, and only a sprinkling of users, victims of poor design, conflicts among developers, or hacks. So apparently she says they still have a smattering of fans who dream that the networks will come back one day. So, this has happened before, and people buy these things that collapse thinking that they'll come back. And there's sort of this mystique to believe, and you can look at this anywhere. You can look at this in politics and religion, and definitely in finance. When people want to believe something and they want to believe in a greater future, they will throw their money at anything, and believing that someday they'll be vindicated and make a fortune. And so that's why I bring up the idea of a currency devaluation, because history doesn't exactly repeat, but it rhymes a lot. And so you always have to ask yourself, what is something backed by? If you look at the U.S. dollar, well, people are up in arms about the U.S. dollar. The U.S. dollar is going to collapse. Well, I've been trading currencies for 25 years, and everybody thought the dollar was going to collapse in 2000, and that with the introduction of the euro, that the Chinese were going to sell their treasuries and jump to the euro, and it just never happened. And because the dollar is backed not only by the most gold in the world, but more so by a strong economy built on technology and innovation, the dollar survives. The dollar is more like water, right? Yeah, it gets dirty, but it tends to survive. It tends to be the functional liquidity of the global financial equation. And so it's all relative. It's relative to the euro. Right now, the dollar keeps going up. I wrote a piece about this or did a video on it a couple weeks ago called Inflation Crisis and the Imploding Dollar, Panic of the Profiteers. That was on May 4th. And I'll link to that in the article version of this podcast. But without further ado, let me bring in my expert. Jeremy Mullen is a professional day trader. He is also the strategist for the Counter-Strike portfolio, where he specializes in taking positions in stocks that have either melted up or melted down and trying to outwit the algos, or at least take advantage of the opportunities they offer. And he's also the editor of our Commodities Innovators newsletter, where he looks at the whole commodity arena and tries to pick winners and losers there. And I mentioned that he is a player in the field of DeFi, which is decentralized finance. And so he's gonna teach us about that a little bit. Jeremy, welcome to Mind Over Money.
Hey, thanks for having me. Crazy week.
Oh my gosh. So is there anything you want to add to this sort of summary I did with the help of Bloomberg about the Terra USD Luna collapse?
Yeah, sure. I'll kind of get into exactly what happened without knowing officially what happened, because nobody really knows. You can see some activity on the blockchain, and a lot of people have some theories of what happened, but it's hard to know exactly how it went down. But first, before I do that, we're talking DeFi here. If you go to DeFiLlama.com, for those listeners in front of their desktop, right away on the main page, it shows a chart of the total value locked in the DeFi space. And what happened is we went from late 21 from about 30 billion to late 22 to 250 billion. And this is liquidity in all the protocols, all the DeFi protocols in crypto. And after this latest incident, and over the last week, we have fallen from we pulled back to $200 billion before this, and now we're at 111 billion. So you can see.
Okay, yeah. And I just pulled that up, and I just want to help anyone out who's listening right now. So DeFi Llama is just like Jeremy said. It's llama like the alpaca. So 2 L's AMA. So DEFILLAMA, and you can see this chart that Jeremy's talking about.
Right. So that chart perfectly illustrates exactly the destruction and what has happened. Basically, I mean, almost 50% of liquidity has come out of the DeFi system. So that's a lot of damage. That takes us back to middle of last year, before the DeFi, the second wave of breakout. So within that breakout was a blockchain called Luna. And this was a transaction for payments kind of blockchain that wanted to facilitate, real world use cases in that kind of spectrum of payments. Within that, you could do staking of the coin, and there was validators who would confirm the transactions like any other blockchain. This thing grew to top 10 coin, and I think you said earlier about 40 billion before the collapse between UST and Luna. And so while there was the Luna coin, there was their stable coin, which was UST. Now this was a logarithmic stable coin that wasn't collateralized like some of the other ones, like your USDC or your Tether, right? Those are supposed to be backed by real money. This wasn't. This is a stable coin that is designed to function and give incentives to investors to keep it pegged to that $1 mark. And the secret behind this whole thing is that Luna and UST were essentially linked, and Luna could be exchanged for UST. So basically, it could be redeemed for $1. UST could be redeemed for $1 worth of Luna at any point. So you have those two segments of the Luna ecosystem, and on top of that, like you said, there's hundreds of protocols built on that. But the main one was Anchor protocol, which was a place where you could take your UST, you could take your Luna, you could stake it for 20%. So it was like a high yield savings account, which sounds great, right? And with that, there was other protocols that would let you leverage that 20%. And you could do this over and over and over. So you can imagine the amount of leverage for an uncollateralized coin that was happening here. And there was
starting to sound like a Ponzi scheme, huh?
Exactly. I don't want to call it that, but yeah.
Okay, I'll say it.
So basically, you have this kind of risky place where you can play around and just get tremendous return with a tremendous amount of leverage. And so they also had another segment called Luna Foundation Guard, which was like the ecosystem's Fed, the backstop. And they knew there was big risk of this thing coming unpegged. So why this Luna Foundation Guard was there was for them to come in case the UST ever fell, right? And what essentially happened is somebody pulled a tremendous amount of liquidity from UST, and it became started to unpeg. And more recently, Luna started buying Bitcoin, and instead of being totally leveraged to the Luna coin, they would have actually backstop on Bitcoin. So now Bitcoin started to fall. This liquidity got pulled at the same time. The Luna Guard was forced to sell their Bitcoin, dropping Bitcoin even further. The faith in the UST, in the Luna coin, become unraveling. And before you knew it, everything accelerated lower. And it was like a cascading waterfall where people tried to leave at the same time. And, everything fell apart. So to the best of my knowledge, it's exactly how this all got unwound, and it happened in under a week, rather quickly. It was pretty fascinating to see. And luckily, I actually didn't understand the Luna UST relationship, like why I wanted to be a part of it. And I'm glad I didn't, because that's why I never got in and I wasn't affected by this.
So you're saying you didn't fall for all the easy get rich money claims out there?
Not this time. The whole relationship between Luna and UST, it didn't feel right. Like, not that I saw this happening, but I viewed it more riskier than some of the other stuff that's out there. And then when they started buying Bitcoin, that didn't seem right too. It was like, what if Bitcoin loses 50% of its value? The whole currency is going to fall apart. So that's basically what happened.
Now, this is interesting because you've done presentations for our internal strategy group. You've been talking to us about how you play in the DeFi market for over a year. Yeah. And so I consider you to be very sophisticated in this realm where I know nothing, and yet you're a player in there and you knew something was wrong, or you just didn't know enough to understand Luna. So that's pretty interesting.
Yeah, it definitely didn't draw me in to the point where I was like, this feels like a place worth risking my money. Some of these other protocols I really like. I like doing some liquidity pools, which is basically, let's say you put in $100 of one coin and $100 of the other coin, you put it into a liquidity pool, and where other people can basically trade those two coins and you get part of the fee. So you're essentially a market maker in those liquidity pools. And so there was stuff like that in a lot of the protocols within Luna, but as far as that whole blockchain, I wasn't interested. I do, I've done some on the Ethereum protocols. I like Algorand, and I think I showed you AlgoFi, which is a protocol within the Algorand ecosystem last week. And basically, I like being the market maker in there. And during the bull market, it's much better because your coins are going up in value. So it can be kind of tough when things are going down, but still, there's more trading activity, so you can reap more fees within that. So it can be still good even in bear markets.
So explain to us if you can. I know that you can make money and earn interest. Is that what happens when you're a market maker? You're holding positions where you can actually earn interest overnight or for a week or something?
No, so you can there's something called staking. So basically you can stake XYZ coin and they'll offer you 20, 30, 40%, whatever it is. And basically what that is they want to give you incentive to put those coins on the platform for whatever reason, and then you can collect interest for whatever reason. And you got to be careful of this because obviously if it's 150%, something's wrong there, right? You got to be very careful. That's a little different from the farming or the liquidity pools. Liquidity pools is the market maker where you are essentially offering liquidity to that DeFi platform where people can trade from, and you're going to earn a certain fee from that trading activity on that platform.
Okay, which one of these things is called yield farming?
Yeah, so yield farming is when you take your liquidity pool tokens and you stake those, and a protocol actually gives you even more return. So they're giving you more incentive to stake your liquidity pool tokens. So they're collecting the fees and you're collecting a separate interest. So it's kind of like you're getting back even double from the platform. So those can be even juicier. I mean, these things some of these, I think I showed you guys last week, they can be up to 50, 70% APR there. And obviously there's a risk with these things, but it's basically you can collect whenever you want. You can see your balance. Usually a lot of these platforms will show you, oh yeah, you're making $10 a day, or depending on how much you obviously have up there, and it'll just kind of accrue up, and you can collect it whenever you want.
Yeah. Now, to listeners, if you didn't understand everything that Jeremy just explained to us, then this should be your clue to stay out of DeFi, and or risk very little.
That's my main problem with the whole thing. Is for this to have some long-term, just positive effect on the financial system, it has to become mainstream. And so these DeFi protocols, their toughest job is getting it to the average person. And for somebody like me who knows how to use it, but it's even tough to articulate to our listeners or somebody even face to face, that's the big problem. How do they bring it to the masses?
Yeah. All right. So I want to talk about blockchain and I want to talk about Bitcoin. One thing I like that you did is you explained that the collapse of this Luna and Terra UST stablecoin was that it was a vicious spiral down in conjunction with Bitcoin. It's sort of, it was tethered to Bitcoin and just one fed on the other. Sort of reminds me of what's happening with Twitter and Tesla right now. As Elon gets distracted and tries to buy Twitter, both are going down.
That deal is dead.
Yeah. Well, since you said that, yeah. I mean, listen, I was skeptical from the very beginning, just because if I was a Tesla shareholder, I would have been visibly upset with Elon for getting distracted again. Like, can't you just focus on the cars and the batteries and going to Mars and leave Twitter alone? So what's your view on why the deal is dead?
I don't think Elon really thought it through.
Right.
Everybody gives him a lot of credit for being a genius, like everybody gives Putin credit for being a genius. And I just don't think that's the case. I think he didn't think it through. It was just an irrational kind of like, oh yeah, let's buy Twitter, because that's how he is. I mean,
yeah, it's very impulsive. Yeah.
Yeah, and I think I gave you guys the. Sorry, we're getting off topic here, but in the brainstorm, I said these $40 puts for September. This stock could be at 30, and it looks like it'll probably go there when this deal falls through. And the other thing that clued me in was that the breakup fee was only $1 billion. That was super cheap.
Yeah.
For a guy like Elon,
and you can see
he designed it that way.
Every other day is a new comment from him that looks like he's trying to wiggle out of it.
Yeah,
it's the, now Twitter has to guarantee me that there's less than 5% bots, and like they're ever going to be able to do that to his satisfaction. He'll find a new wiggle clause.
Yeah, and maybe he lost a bunch of money in Luna. Who knows?
Yeah. All right, so back to the blockchain. So this failed experiment, this one niche of the DeFi market, Terra USD, UST, and Luna, is this an example of how weak the concept and principles of the blockchain are?
Yeah, I don't think it's about the blockchain. I think it's more about just the consistent risks that are out there with crypto. It's the wild, wild west still. It's not as regulated as it should be. And regulators really have to look into this, especially the stable coins, especially the logarithmic stable coins, because these aren't collateralized stable coins. There's nothing behind them. And it's fueled by this leverage incentive, which can work. I mean, there are others out there that are working, and but I just saw another one, a lesser known one, depegged as well. So there might be people starting to attack these things now. So this is more about the stablecoin, the DeFi ecosystem, than the actual functionality of the blockchain. The blockchain works fine. It's just, how do we use the blockchain? If we're going to use it for DeFi and stablecoins and mass leverage, there's going to be these incidents from time to time. So I think regulators really need to step up, and we kind of have to educate retail about these things so they don't get sucked into them. And they know the risks. And I think that's essentially it, is the risks of these things are unknown to most people. And their minds are blown when this happens. And it's happened before. Like BitConnect was another one that fell apart a couple years back. Much smaller. I think it was, in comparison, maybe 7 billion in market cap to this. Maybe even lower. But this is something that's going to be a consistent problem with the space. And it's kind of like a buyer beware thing before these things become more regulated and more mainstream.
Yeah, so I'm going to share a couple thoughts here. I'm not very optimistic about regulators getting ahead of this anytime soon, and that's for a couple reasons. One, the innovation going on here in the crypto world and blockchain is just, it's like almost exponential. The products and the structures that are being invented. And the reason I don't think that regulators will catch up anytime soon is because just the experience I've had. Number one, the exchanges actually tend to lead. So if you get solid crypto exchanges where they know how to manage the risk and eliminate counterparty risk so that something is fungible and collateralized, then so they'll be the leaders and they'll teach the regulators, okay, this is how to structure this market. And then I also have experience with how far behind the SEC can be. I used to pay very close attention to the institutional filings, the SEC 13 Gs and Ds and 13 Fs. And a few years back, this was like over 5 years ago, there was a new 13D or G filed saying that a certain institution had bought a certain amount of a stock. And I think it wasn't Amway, but it was something like Amway. It was some small like network marketing company. And there was this report filed that somebody had just taken a new 5 or 10% stake in the company, and it shot the shares up like 30% in a day. And it turned out it was a fake report. And I thought, gee, how can a hedge fund file a fake report with the SEC that, XYZ was bought or sold? And you know what the SEC said? Hey, we can't track all these. We can't guarantee the validity of all these filings. And I thought, holy smokes, if they can't, if there's no validation for the SEC filings on institutional buying or selling, the SEC is way behind.
Yeah, that's why I agree with you. They are very far behind on this.
Yeah. So I know a new crypto exchange just got up and running in New York. I forgot the name of it, but I actually know. I used to work with one of the principals, really smart guy from the options world in Chicago, and I think that Chicago has been the home of futures and new product creations in derivatives and options, and those people will be the leaders in teaching the government how to do it. All right, I want to ask you about your view on Bitcoin. Fundamentally, do you see it ever making new highs, and how low could it go before it does, and where would you buy it?
Yeah, okay, so fundamentally, there's an issue, right? Because we just talked about that chart with the on a DeFi llama. That's a big part of it fundamentally, right? So I view Bitcoin as the reserve currency for the whole crypto space. So if there's half as much money as there was in this crypto space just 3 months ago, that means that Bitcoin has half as much money to go into it, right? So that's kind of my big problem with Bitcoin right now is the funny money just isn't there anymore. We have the dollar rallying, we have interest rates going up, we have a QT coming up here, and perhaps Bitcoin has priced a lot of this in addition to the Terra down move.
QT, you mean quantitative tightening, right?
Yes.
Yeah. Sorry. So it's the Federal Reserve not just raising interest rates, but also pulling back all their bond buying and maybe selling some bonds.
Yeah. So let's walk back a couple of years. COVID happens and Bitcoin falls to 3,000. We've taken all these measures. We print more money. We're writing checks to people. Bitcoin just shot up like crazy. So Bitcoin priced in a lot of this inflation coming up, but then once we had a little hint of this turning, Bitcoin basically came from 69,000 all the way down to, back to 30,000. And then we rallied for a little bit, and then we've recently come back down below 30,000. So I don't know if Bitcoin is ahead of the curve here on what's going to happen, but what has happened over the last couple of years has been extremely fascinating to what has happened like a year later with what the monetary system is doing and where money is flowing in and out of the global economy. So right now, I think there's a big problem that money is essentially not there anymore. We've lost a lot of money out of the equity markets. As I said, the global central banks are pulling back, and we've had this DeFi blow up. So there's a lot of fundamental things working against it. As far as a payment network, that part of it, people still argue is like the big use case. There's so many other blockchains that are better suited for that. So I don't see that fundamentally as a bull case, really. So yeah, it's kind of where I'm at on the fundamental aspect.
Yeah, that's interesting. You said you talked about the volatility of Bitcoin without using the word volatility. You talked about it in terms of it being a risk asset driven by easy money, and you also talked about it as sort of leading the news and the events like a canary in a coal mine, right?
Exactly.
It hyper
Kevin,
spikes.
I'm telling you, as a day trader, I watch Bitcoin to give me a clue on what's happening in the overall market. It'll pop before the S&P 500 pops. So if you're trading if you're trading SPX calls, it puts like I do, it can give you a little more confidence to go with that direction. It's very interesting. I've noticed that over the last 3 months as it's an intraday leader, not only and I think that's because there's a liquidity issue, right? So it's harder to get in and out, and prices moved easier. So it can essentially go up or down before the overall markets do. So it's very interesting for you guys that look at price intraday.
Yeah, basically it's the most sensitive of risk assets. It's going to move the quickest, the most, the fastest when things turn. That's very interesting.
I mean, as we've been talking, it's gone from 29,500 to 30,250. It's just spiked up, and the S&P went from 4050 to 4090, just kind of slowly after that. So it's interesting.
That's fascinating. Okay, so the last thing I want to talk about is sort of an elephant in the room for Bitcoin, and that is one of the biggest bulls in the room is Michael Saylor, the CEO of MicroStrategy, symbol MSTR. They are a software and services firm where the CEO just decided that Bitcoin was the future, and he was going to take the cash on their balance sheet and deploy it. And he's done that and more. He's even borrowed billions of dollars at very low interest rates to add to their Bitcoin collection, which is probably in the hundreds of coins, I think. I'm not exactly sure, but there's rumors out there that let's say his average position is, let's say he owns Bitcoin from 30,000. I forget what the number is, but the one number that's floating around out there is that at 21,000, he would have some kind of margin call. What do you think about that?
Yeah, so I just Googled 125,000 Bitcoins is what they have, somewhere around there. So they have about 4 billion worth of Bitcoin, the average price of 30,200. So they essentially are underwater on that position. The brilliance of what he did is as the MSTR, the stock went up, he did stock offerings to buy this Bitcoin. So that was kind of, and every time it went up another 100 points, another offering, I'm buying more Bitcoin. So he really leveraged himself the right way as far as, doing the stock offerings to buy. And it looked pretty smart. The stock went up, from 100 to 900. But unfortunately now he can't buy more Bitcoin, right? The offerings aren't there. The stock was trading under 200. I see it's over 200 today. It fell all the way to 134. So it almost fell all the way back to where it was before he started buying Bitcoin. So as far as the margin call goes, I am not sure where he has to get out. I don't know if the board is having discussions on, we have to give this up. We have a fiduciary duty to our shareholders at MSTR to to cut this position because it's losing money. I have no idea. But what I would think is if Bitcoin does go to that low $20,000 area, MSTR's stock price is going to be teetering down to under 50 and basically threatening to take the company bankrupt. Because if it comes that, if we're going down to 20,000 and we lose another 50%, what's this company worth? What is MSTR really worth? So
Yeah,
there could be trouble there. For now, if Bitcoin can maintain 25 to 30, it could be all right. But I don't see how this is going to be a long-term benefit to him unless Bitcoin can find another way to shoot higher, which I just don't see.
And thanks for clarifying that. He owns like 130,000 Bitcoin. I said hundreds. I meant over 100,000. And so I know he's a majority shareholder of MicroStrategy, but I don't know the voting rights on the board. You would think at some point the board could sort of make its own decision, like, this is putting the company in jeopardy, and we need to let this dream go, Michael.
Right. Yeah, and I remember when they were first earlier doing it, and there was a lot of confidence within that board. So they've been with him this whole time. I don't recall any kind of arguments or anything. Not that I was sitting in on it, but usually if something big like this is happening, that kind of makes the news as if, the board vote was close or something. I remember it being like a full confidence.
Okay.
So perhaps they still have it. I don't know.
Yeah.
The next conference call maybe is worth a listen to over at MicroStrategy.
I actually got to see him live on YouTube over the weekend. He was doing a presentation with, I think, Pompliano. And I think that guy has got a couple of brothers too. So they were all peppering him with questions, and they were asking good questions. But Saylor sort of took the high road that, maybe people don't understand Bitcoin. It's volatile, but, and he certainly would have been an incredible genius had it, stayed above 50,000 and kept marching to 100,000. But by virtue of that, he gets to wear the other hat as it goes much lower, and he gets to he may have to pay the piper on this one.
And I don't think it's about people not understanding Bitcoin. I think everybody gets the idea by now, right? Everybody gets the idea that it's not fiat and there's limited supply, and the more people as we go on, the more valuable it's going to get, yada, 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 right? The problem is if you have an outsized position and you have shareholders and this thing keeps going down, there is going to be some kind of pressure on you to, what's going on here with this? Or, if we go from 30K to 20K, we just lost a third of our value. If we go to 15, we lost 50. Where's your out? Michael? Maybe that's me being the trader, always looking for an out. But boy, did he make a big splash, and it's going to be hard to get out of that pool.
Oh, one last area I want to ask you about, if you have a view, is on Square or PayPal, because Square and PayPal both stepped up and decided, that Bitcoin was a legitimate asset. They wanted to not only make it accessible to their customers, but they actually wanted to have stakes in it. And it seems to have affected their net worth in a negative way. Do you think
their positioning obviously isn't as big as Saylor's, or even Tesla's. But I think the in for them is, they're payment processing. So they saw a future of how can we facilitate payments down the road? Let's get people started on this. Let's get them familiar with it. If you use PayPal's, like just their trading on Bitcoin, it's pretty much just like we're buying it and we're holding it kind of thing, right? There's not much you can do with that Bitcoin. They hold the custodial rights. If I buy it on Coinbase, I can move it around to whatever I want to do with it. On PayPal and Square, you can't do that, as far as I know, unless they change things. But once it's in there, it's just like it's on a piece of paper on your phone, and you see, oh yeah, I have 0.1 Bitcoin. That's great. Now, what does somebody do with that? You can't do anything. If I was at Coinbase, I can move it to a DeFi protocol, and I can do something with it. So it'll be interesting to see if that turns into something. Is it just going to be a payment kind of usage, like down the road, can I go on to Amazon, use my PayPal account, and select Bitcoin as my payment usage? So we'll see. Like this whole thing has many steps yet before it's fully developed. And I think those guys just are getting started.
Yeah, and I'm just catching up with PayPal's price. I didn't realize it's below the Corona crash lows.
Yeah, I've been buying it since those January earnings, slowly limping in, not working out. But it's one of those things where I'm just slowly buying it every 5 to 10 points down in the IRA. It's not a trade; it's an investment. But yeah, I think it looks interesting here. But they're going to have some issues. The stock is a bleeder.
Yeah,
the chart looks horrible. What can I say?
One last thing I'll mention about PayPal and Square is, they're definitely innovators, and they created the scale of their business that they'd be able to innovate and keep adapting. But there's so many private fintech companies. I follow this one guy who was an investment banker at Goldman, and he just tracks all the private money, like the billions of dollars in financing. Last year, there was like $40 billion in financing in one quarter just for private fintech. So it's like all these little tiny startup innovators are ready to create something new to either take on Square and PayPal or to do something in blockchain and DeFi.
Right. So it's a very saturated space. And when you add in the blockchain protocols that are essentially doing the same thing, but in their decentralized kind of way, if there's, like we said earlier, the less money that is circulating out there, there's less money to go into all these different kinds of elements of that financial ecosystem. So I think PayPal will recover, but it might take some time.
All right. Well, that pretty much sums it up. You have to know your risk, and you have to know your time horizon on any place you put your money. All right, Jeremy, thanks so much for joining us and breaking down this very complex and evolving ecosphere, I should say.
Yeah, thanks for having me.
This material is being provided for informational purposes only, and nothing herein constitutes investment, legal, accounting, or tax advice, or a recommendation to buy, sell, or hold a security. Do not act or rely upon the information and advice given in this podcast without seeking the services of competent and professional legal, tax, or accounting counsel. Publication and distribution of this podcast is not intended to create, and the information contained herein does not constitute an attorney-client relationship. No recommendation or advice is being given as to whether any investment or strategy is suitable for a particular investor. It should not be assumed that any investments in securities, companies, sectors, or markets identified and described were or will be profitable. All information is current as of the date herein and is subject to change without notice. Any views or opinions expressed may not reflect those of Zacks Investment Research as a whole.